everyone. Thank you so much for joining me on this gorgeous Tuesday. Well, I guess it's gorgeous depending on where you are in the country. I guess it could be rainy and drabby where you are, but thank you for joining anyway. And this is a Tax Tuesday, and essentially, what a Tax Tuesday is when a collective business advisor like myself will come and offer to answer your tax questions. Any tax questions you have, throw them at me, and I'd love to discuss them. And a little bit about Collective. We are your solution to your back office paperwork. We'll handle your administration, your taxes, your payroll, your S Corp formation. We do that all for a low subscription price. So you can think of us as a one-stop shop for a small business owner. We focus on your paperwork so you don't have to. But like I said, thanks so much for joining. Let's go ahead and get started. I believe that we already have some questions that are ready to be addressed. And the first one is, you guys are still closed for new clients. So no, we are open for new clients. So Collective can only handle a certain type of client. So typically we're a very niche company, and we go after consultants, service-based professionals, freelancers, things like that. So I speak to a lot of realtors, a lot of software engineers, marketing consultants, online creators, just all kinds of services business, really. But we are a service business-based company. And so as of now, we can't take anyone that manufactures products, owns a lot of commercial real estate, rental real estate, things like that. We're focused on the consulting niche. So when you try, what you do when you are interested in joining Collective, you'd go to our website or other channel, and you'd schedule a call with a business advisor like myself, and we would go through and see if Collective would even work for you, see if it would be a good fit for you. And if you're interested in that, please, send us a direct message on Instagram and request a schedule link, and we'd love to have a conversation with you. And before we want to welcome you as a member, we want to make sure that we fit for you. We work for your business because, quite frankly, we don't for everyone. So yeah, please schedule a call with us, and we'll go through your situation. And no problem at all. Thanks for the question. All right. First question. Oh, okay. What is an S Corp? Well, I'm glad you asked. So before I go into what an S Corp is, let me tell you what it's not. An S Corp is not a corporation. It isn't. So a lot of people think that it is. And, for good reason, of course, because the word corp is literally in the name S Corp. So of course people think it's corporations, but it isn't. And what an S Corp actually is a tax election. It's not a business entity by itself. It's a way to ask the government to tax you a certain way. So typically 3 types of entities, business entities, can elect S Corp tax status. Those are LLCs, partnerships, which is just another word for multi-member LLCs. That's what a partnership is. And corporations. Those are the 3 entities that can elect to become an S Corp, to be taxed as an S Corp. And a vast majority of people need to first set up an LLC. They need to be LLC-based S Corps. And the reason that is because to first form a corporation is typically overkill, way overkill. And typically, the only reason why you'd want to become a corporation is if you wanted to eventually go public, issue stock in yourself, or, list yourself on a public stock exchange, or you want a little bit of flexibility with ownership. But also with a corporation, you have additional administrative requirements. You have to keep a board of directors. You have to keep board meeting minutes. There's just more, there's additional administrative requirements that aren't required for an LLC. And the cool thing about LLCs is they provide just as much legal protection as a corporation does. A corporation doesn't provide any additional legal protection. All it does with a corporation is just a bigger lift in terms of the paperwork. So a vast majority of small business owners need to first be LLCs. And then if it's worth it, kind of depending on where their income is, what they need, then it might be worth it to become an S Corp or make an S Corp election. And what does that do? Okay, well, here's what it does. Before you make an S Corp election, let's say you're a sole proprietorship, let's say that you don't have an LLC set up, let's say that you do have an LLC set up, let's say you have a business entity set up, it doesn't matter. You're paying a lot in self-employment tax. Before you become an S Corp, you're paying the maximum amount of self-employment tax. And self-employment tax is 15.3%. It's a flat tax rate. So someone who's self-employed, regardless if they're just operating as a sole proprietorship or operating under an LLC, let's assume that they make $100,000. Before you become an S Corp, how you'd find out your self-employment tax is you take $100,000 times 15.3%. That's how you come up with your tax. But with an S Corp, it works a little differently. And that's paperwork filed with the IRS, by the way. That's how you become an S Corp. First, you set up your LLC. That's done with the state, with the Secretary of State. So if you, for example, I live in Florida, and the organization that handles all the business formations and things like that, it's called SunBiz, and it's on the Secretary of State's website. And you can go there and form an LLC and all that good stuff. But the next step, the S Corp election, that's done with the feds. That's done with the IRS. And it's paperwork sent into them. And what that does, technically speaking, is you become an employee. You become employed as a W-2 employee of your own business, of your own LLC. You are now an official employee of the LLC. And since you are an employee, you pay yourself a wage, just like an employee would be paid. Let's say that you worked for someone else as a W-2. You get paid a salary. It works the same way with your own business, the S Corp. The S Corp will actually pay you a salary. But the cool thing about it, though, is that now, with this S Corp election, the only chunk of your money that is subject to the self-employment tax is your salary. That's it. The rest are business profits, and they aren't subject to the self-employment tax. So if let's say that you make $100,000, and for whatever reason you decide that a reasonable salary to pay yourself would be $45,000. That's not an exact amount. It depends on your situation, but let's just use that as an example. That first $45K, it's still subject to the self-employment tax. You still pay it. You can kind of think of it as a payroll tax, and it's still charged on that income. So that first 45, it's still subject to the 15.3%. But the other, 55? Yes. The other 55, those are your distributions or your business profit. The technical name for them are distributions. But all the rest of your money outside of your salary, those distributions are not subject to the self-employment tax at all in any context. And so there, assuming that you pay yourself that much, how much is that? That, corresponds to tax savings of $8,400 a year. That's, 8.5% of your entire net income. Like if you could just raise your net income by 10%, tomorrow, a lot of people would take that deal. And that's what an S Corp does for you. Now, of course, there's caveats. There are catches to this. There are catches to these sweet tax savings. And one of the catches is increased administrative responsibility. When you make an S Corp election, there's just more things you got to do. There's more paperwork you have to fill out. There's more softwares, certain times you have to buy to handle your taxes. It's a little bit more complicated situation than it is, just being an LLC. But thankfully, that's where Collective comes in. And we'll handle all your stuff. We'll handle all the annoying S Corp stuff. And believe me, there's a few annoying elements about it. First, when you make an S Corp election, you have to run payroll. Officially, you have to be on payroll, which means that part of your money, part of how you pay yourself, will be routed through a payroll processor. It's how it should be anyway. And those cost money. And those softwares cost money. They can be a little confusing to use. It's not necessarily always straightforward. So that's one of the annoying aspects. And the other is your bookkeeping. It becomes a little bit more complicated in terms of an accounting standpoint as well. Before you become an S corp, you don't have to track a balance sheet in your books. The IRS doesn't ask for that. You just don't need it. But when you become an S corp, you do. It's a requirement. You have to start tracking the balance sheet, and who knows how to do that, right? Nobody. Well, we do, of course, but nobody else. The max. Thank you so much. We have been great for the sanity and the bookkeeping. We appreciate it. And that's what we're here for. We handle the paperwork so you can run your business. But anyway, that's one thing, is the balance sheet. In your bookkeeping, you have to deal with the balance sheet. Also, your salary amount. It's important that you pay yourself a reasonable salary. If it isn't reasonable, because here's the natural question that I get when it comes to S corps, is that, well, if I'm only charged the self-employment tax on my salary, then why don't I just pay myself as low as possible? Why don't I just pay myself $1, right? Like, go the Warren Buffett route. He pays himself $1, so why not? The problem is that you would get audited by the IRS. The salary has to be reasonable. That's the only thing that the IRS says about it, is that it has to be in the context of what you do, how much money you make, how much time you spend in your business, how much you pay yourself has to make sense. So, if you made $100,000, paying yourself would be very risky. Paying yourself $10,000 would be very risky. But, let's say that you paid yourself $40,000 or $50,000. That's considerably less risky, way less risky. And your chances for audit go way down. But your chances for audit go way up the lower your salary goes without justification. So that's another annoying thing, is, having to worry about whether or not you're going to get audited, whether or not you're doing things right. Also, the business tax return, the S corp tax return. Literally, you have a business return when you're an S corp. It springs into existence. So when you make an S corp election, at the end of the year, it's called an 1120S. At the end of the year, by March 15th, that's when it's due, you have to file an 1120S S corp tax return, and it's a complicated return. It's not a simple kind of quick and easy personal return like a 1040, which is where LLCs go. LLCs just go on your personal return, and it's simply just kind of a list of your profit and your expenses. It's a profit and loss statement on your personal return. That's all you have to do for your LLC. But for an S corp, you have the business return, and you have to understand stock basis. You have to understand some recapture rules for inventory. It's an extremely complicated tax return. So an S corp election is not something that I would suggest you do yourself. It's something that, at the very least, have a conversation with us and see if Collective would be a good fit for you. Like I said earlier, send us a direct message in Instagram, ask to schedule a call, and we'd love to have a conversation with you. Is an LLC necessary if you don't make much? That's an excellent question, and there's a couple ways that I would answer it. It's not. So an LLC, it's more just all things being equal, it's more necessary for businesses that have a little bit higher legal exposure. So, to be frank and to be honest, a lot of people that I speak to, consultants, service-based people, an LLC by itself isn't as important because, there's just not a lot of legal exposure in service-based work. But so no, it's not necessarily necessary if you don't make very much. But here's the caveat to that. It would be a good idea if you expect to make more later on. And the reason that is because the only way that you can become an S corp to save money on the self-employment tax is if you are an LLC. You have to be an LLC first. So let's say that you are in Let's say we're in a certain tax year and it's January, it's the beginning of the year, and you're just making a little bit of money. You're not making a ton of money yet, and you're, determining whether or not you should set up an LLC. Let's say that you don't set up an LLC. And, later on, you start making some good money. Like, some months go by, you start making great money, and then, oh, you determine it's probably worth it for me to be an S corp. I'm making enough money to where, I'll save a lot on these self-employment taxes. Since you're not an LLC, we can't backdate your S corp election. Can't be done. So all the money that you've made currently as a sole proprietorship cannot be included under the S corp tax rules. So that's a really important point, is if it's necessary to set up an LLC if you'd like to save money in the future, especially within the same tax year. Because if you don't set up an LLC, you start making money, we can't backdate the S corp election, and you've lose a lot in the in self-employment tax savings. But let's say that you do. Let's say that you form an LLC in January. Let's say that you've made some money. Let's say that you've made some money from January 1st onward, and you only get the LLC set up, registered like January 25th. That's okay. In a situation like that, we'd be able to rope in any of the money that you've made from January 1st onward, because the LLC was created in the month of January. So that's something to keep in mind, that it might not be a big, a big deal for you now to not have an LLC, because you're not making much money. But if you expect to make good money in the future, it's something to consider. And in my opinion, it's something to go ahead and do, especially if you're in a state that doesn't have any sort of, LLC taxes or business taxes on their own. It's a good idea to just go ahead and set up an LLC if you plan to start a business. Can someone from another country open a corporation in the USA? If so, requirements. Someone from another country can open up business entities in the United States. There's not really much requirements on that. You can open up a business entity in the United States. The only thing is that you can't necessarily become an S corp if you're from another country. You have to be sort of a natural citizen of the United. You have to pass what's called the substantial presence test to make an S corp election on that corporation. So essentially, you have to have a green card. You either have to be a citizen of the U.S. You have to be here for a certain amount of time. You have to pass the test to be allowed to make an S corp election. So to answer your question, you can set up, someone from another country can set up a business here, but they may not necessarily be able to elect S corp tax status on that business. I have an S corp and only paid myself in distributions last year. Am I in trouble? Well, I mean, it depends on how much money you've made. Like if you made $100,000 and you paid yourself all in distributions, that's a little risky. And I would even consider maybe getting ahead of it and, amending that tax return, amending the S corp tax return, and going back and running back payroll, paying yourself a little bit more in salary. So you'll pay a little bit more in Social Security tax and Medicare tax, but that will keep you safe from audit, or it'll at least help. Because yes, it's extremely risky to make a lot of money and to not pay yourself out in salary. Extremely. Can owners have ITINs? Yes, they can. And that is essentially, that's a tax identification number. So, something like a tax identification number. Can partnerships elect S corp tax status? Yes, they can. They absolutely can. And a partnership, really, that's just another word for a multi-member LLC. When two or more people go in to form an LLC, that's a partnership. That's what it is. And absolutely, you can elect S corp tax status. Now, it's a little bit more complicated on, how to do it, how people pay themselves in taxes, how people pay their salary, like what partner gets paid what. It's a little bit more complicated, but yes, partnerships can elect an S corp tax status. Now, as of now, collective can't serve as partnerships. We're really only in the space for single member LLCs right now. The only caveat to that, though, were let's say that you lived in a community property state, a state like California or Texas. I believe Texas is a community property state. Maybe I could be wrong, but there's in community property states. There's around 12 or 14 of them, and if you live in one, if you have a spouse that is on your business, let's say that both you and your spouse are on your LLC, we can take you if you live in a community property state, because the state, when a married couple is on an LLC, both on an LLC in a community property state, the state just recognizes it as one LLC, as a single member LLC. So they don't even really recognize it as a partnership. So in situations like that, we could take you on. At roughly what salary mark would the switch from the LLC, would it make sense to switch from an LLC to an S corp? Thank you, Lily. That's a great question. Honestly, to answer that question depends on how much money a professional will charge you to run an LLC, to even come up with an LLC. It depends on how much money they're going to charge you. Because what we say here at Collective is we say around 60 grand. 60 grand net income is when it's worth it to become an S corp. Sorry, I got tongue tied there quite profusely. But that's when it is, $60,000. And the reason we say that is because the price for all our services, for the S corp formation, for payroll, bookkeeping, estimated tax deposits restructuring, tax support ongoing, your business and personal return, all of that happens for $299 a month. At will contract. It's an all-inclusive price. If you pay $299 a month, we'll take care of it for you. And if you pay in full for a 12-month period, Collective gives you 15% off. So that comes out to about $254 a month. Generally speaking, though, Collective costs about $3,000 a year, depending on which way you choose to pay. The reason we say it's worth it to become an S corp at 60 grand is because when people elect S corp tax status, when they are making $60,000, generally they're saving around $4,000 to $5,000 in the self-employment tax. And that's a spitball, that's an estimation, but generally that's where the numbers end up. So if Collective's cost is $3,000 to handle everything, and you're going to save money, you're going to save around $4,000 or $5,000 at the $60,000 mark, that's when it's worth it to join Collective, because you get all of your tax situation handled with a net benefit of savings. You're making more money from joining Collective, but only at 60 grand. If you're below 60 grand, solidly below it, the chances are you're not saving much money by becoming a Collective member. And that's important to us. We want to service our clients with integrity, and we don't want to sell you a service or sell you some beads that just aren't necessary for you right now, or just aren't in your best interest right now. So if you're below that 60 grand mark, I would just, at the very least, I would go ahead and set up an LLC, just to be prepared to where when you might one day want to become an S corp, and if that's the case, we can backdate the S corp election. But if you're over 60 grand, certainly there's no time to wait. Schedule a call with us. We'll have a conversation and we'll go through your situation. You are so welcome, Lily. Thank you so much for your question. Should I be, I haven't had this question before. It's a great question. Should I become an S corp for a short-term contract? So this is what I expect they're asking. There's some people that I speak to that are on a 1099 self-employed contract for like 6 months, and that's it. Their contract ends. They won't continue it, or things like that. So the answer to that would be no. If you don't expect to, in a relatively long-term sense, like if you don't expect that your self-employed business, that your business won't be around for over a year, then it's not worth it to elect S corp tax status. Because here's the thing: the S corp tax status is perpetual, meaning that it doesn't matter if you make money or not, you still have to satisfy the requirements of an S corp, regardless if your business makes money or not. So this year, it might be worth it since it's only 6 months, it's not quite worth it, because once you elect S corp tax status, you have to file the business return every year. It's not like it just kind of goes into the abyss. The IRS requires that business return, regardless if you make money or not. And it's a pain, and it's a complicated return. So, and the only way that you can stop an S corp election is, to go through specific procedures, like, send in paperwork. It's a little bit, it's not a straightforward process to just end an S corp election. So it's not a good tax structure for short-term contracts. Now, if you expect to have short-term contracts over and over again, that's totally fine. Like, let's say that your business is just made up of 3-month contracts. Every 3 months, you have a different contract for years. That's totally fine. Since it's in perpetual, since business is perpetual like that, an S corp election makes sense. But if it's just a situation where you have just kind of a one-off opportunity, and someone's going to pay you, $100,000 to share your expertise for 6 months, and you're never going to touch self-employment again, then don't become an S corp. Don't do it. And that's another thing as well, is when you schedule a conversation with us and you're, trying to learn whether or not it's worth it for you to become an S corp, we at Collective will ask those type of questions. We'll delve into your history. We'll delve into what you expect your self-employment situation to end up as, and we'll advise you whether or not it's worth it for you to even become an S corp. All righty. I think I have time for one more question. Let's see if we... Okay. My accountant suggested that I become a C corp and not make an S corp election and pay myself a salary to where the corporate income is right at zero. That is possible to do. You can make a C corp and pay yourself a salary and then pay yourself the rest. That is possible to do, but it's more complicated. It's more complicated than just making an LLC with an S corp election. Now, again, one of the reasons why you'd want to do that is if you ever wanted to have tons of owners in your business, like over 100, things like that. That's when, S corps or C corps are more worth it, but that just doesn't apply to a vast majority of people. So I would still suggest to set up an LLC. But that is all the time that I have this glorious Tuesday. I actually have a conversation with another Perspective Collective member that I've got to jump to. But it was a pleasure, as always. I love speaking to self-employed individuals like yourself, and great questions as always. And I'll be back here next week. Before I go, please, like I mentioned earlier, if this sounds interesting to you, if you think that an S corp or collective would be a good fit for you, send us a message on Instagram. Request a schedule link, and we would love to have a conversation with you. But I hope everyone has a great week and enjoys it.